Row, row, row your boat gently down the strait. Row, row, row your boat gently down the strait. Y'all are distracting me. Row, row, row your boat gently down the
Yeah, we're
strait.
definitely
Wait a
distracted.
minute. Wait a
Oh,
minute. Wait a minute. We're gonna
Eve.
blow you away. All right, that's okay. Anyway, I just
Yeah.
ruined a kid's little.
I
What
hope no
would you
kids
call
are
it?
listening to this. Go have a
We were
child.
canceled because of our inability to row a boat. This is always good.
Things we do for this show.
I had to rhyme straight with something, so I said blow away. So I guess that kind of goes. Yeah, that's what I'm saying. You probably didn't hear that. I was
So you repeated it. So yeah.
ruining childhood for people. All right. So anyway, the reason I brought that up and I was saying that, and those guys tried to row their way out of a puddle, I guess. I don't know. It's because of the Strait of Hormuz is still the central issue. At least that's what we'll just say Shakespeare has in its act it's currently in from all the script writers. And so when you talk about the new Fed chair, we're waiting on that. We're waiting on the Strait of Hormuz to be settled. There's just a lot of waiting going on. And we're all waiting at the very top as if we are flooded in a house and we're at the very top of the ceiling because that's where the market is. It's doing records still. And you have to
still shut down too.
Yeah, yeah, a part of it. Yeah, part of it. Appropriations. That's all the government knows. Also, extend and pretend, which thank you, Daniel, for your for finally doing the pick one. You did put extend and pretend in it. Yeah, I know. It's not Friday yet. This is Thursday. By the way, this is Thursday. Yes.
I wasn't going to touch it.
Neither was she. This is Thursday, guys, not Wednesday.
It's ladies'
not
night.
Friday. Yeah. Oh, yes, it's ladies' night. All right. So anyway, I'm Darin, and this is Arbitrage Trade. This is After the Bell Thursday edition. We'll talk about the new format, etc., on the bet and everything else. Everybody's a winner. We all feel good. So thank you, Royce. We're all winners with this right now. Anyway, my guest top right is Daniel Hopwood back in his home. He's now an expat again, I guess. We've got down bottom left. We've got the bankster who is also in a new home.
Everyone gets new home except me.
That's right. I'm in a home that
you're just stuck in the office,
right?
Bottom right is what did I say? Optimus Prime is Royce, who has released his audio version of his book now, Investing in Indicators, which you can get on Amazon. What else do I've got here? I got to do the disclosures. We're not financial advisors. This is not a financial advice. This information provided is surely for educational and entertainment purposes only. Please always consult an investment professional before making any final decisions or financial decisions. All right, let's keep moving. Let's do the market. All right, since you're back in that other world, Daniel, things may have changed, but not really. They just went up basically from when you looked at it. Dow Jones 49,651 in its quest for 50. We have S&P 500 went over 7,200 and stayed there for the first time ever at 7,209. We have NASDAQ at 24,892. Those were all up. The winner today was Dow Jones 1.62 up, and S&P 500 up 1 point basically. NASDAQ just a little bit under a point. The dollar is 97.94 and falling. The crude WTI is going up 105.46. Brent is at 111.16, and as a reaction to that, gold is going down 46.29. Silver is at 74.13. And when I say up or down, I mean from the previous week when we talked, or we were here last. We got Bitcoin that is going up. Crypto's going up 76.465. Ethereum at 22.65, and XRP. It keeps getting played with up and down. It's at $1.37 now. Yep, that's all I got. That's the market. But I know you want to add some stuff, some interesting facts to that, Daniel. I think you had on there.
Yeah. So I mean, as you said, like we're still sitting at all-time highs, which is quite impressive. I mean, Bitcoin even went to 80K this week before it hit its head on the median line of the apocalypse band. So a little bit of resistance there. But I unfortunately did not share this chart with you beforehand, Darin, but in our chat, when this war had first started, I shared a chart at the different price levels that if oil hit and stayed at, inflation would go to. And so I was just thinking about that chart as we cross back over 100 this week. And so if you look at a chart of oil, like we've sustained quite high levels, and we're at 105 right now, right? If we hit, let's round up to 110, that puts us at 3.5% inflation if we continue to stay at these elevated levels. So, as much as we're waiting for the strait to be open for hopefully oil prices to come down, we have now been in an elevated oil level for 2 months now. So it's not quite the 3-4 week war or whatever. It was I see Josh laughing. It was supposed to be. So there are 2 months still isn't the longest thing in the world, but it is. You will start to see some higher inflation levels from this, which I think we've already started to see a little bit. But I just thought that was an interesting thing to revisit of what the real world implications of those sustained oil levels are. And the other fun fact that I did bring was that semis, like semiconductors, that sector was up. It's not anymore, but was up a record 19 days in a row for a 33% gain for a sector over 19 days, which is really the thing that has been carrying the larger part of like the S&P and the NASDAQ. And so, Darin will love this one. When that has happened before, bad things have happened afterwards.
You mean like when all the investment entities get together and say, hey, it's time to pump chips, and then we'll find something else to pump next? Yeah. Okay, that's what we're doing. But I did see that. I saw like one of them was up 117%, something ridiculous this year. So we'll see. Because I remember they all they went way down. So it's like they all went down, got the price where they wanted it to, and now they pumped it back up to all-time highs. So it'll be interesting to see what's next. What industry, which Trump likes to say, is next. Anything that you want to add to just general market comments, you two guys at the bottom? Royce? No?
Yeah, I'm
okay.
good.
No? Good. All right.
Leave that alone.
We'll move right on then about the numbers, if you believe them, the layoffs. So go ahead and this one I actually do believe, but I still think they're probably understated. But go ahead, give us the facts and figures on layoffs in general in this big, resilient labor market that we have, Daniel.
Yeah, so far this year, there have been 80,000 tech workers that have been laid off, which is a little bit more than half of the 124,000 of the total layoffs that we have seen this year. Meta plans to cut apparently 10% of its workforce sometime. I guess for me, it's this month, May. For you guys, it's next month. And
what's it like in the future?
Yeah, it's great. It's dark outside.
Your kids, something's got to be done about your kids.
Yeah.
I've got to do it since it's a singing thing. It's gonna be May. All right, now you can go.
Oh God. Okay.
Oh jeez. All right.
I'm canceling us on principle.
Mhm.
That's fair.
Mhm.
I'll have to get up early then.
There you go.
Oracle laid off 18% of its workforce in March, which is pretty crazy. Amazon did 30,000 last year. Microsoft reported this week that they were going to try to buy out 7% of their older staff. So what you're seeing is a lot of layoffs, and you still haven't seen the stock price kind of reflect these, because what apparently, kind of Wall Street is saying with their dollars when it comes to the Mag 7 stocks particularly is that they're not seeing the return on the capital expense of spending it on AI and these data centers mostly. And so the Mag 7 companies like Meta, Amazon, Microsoft are trying to reduce their OpEx by firing more people. It's not necessarily that AI is replacing those jobs, it's that they need to spend so much money, and that for them not to get crushed in the markets, they need to start laying people off so that they can save some money somewhere. So the question is, with all of this spend, is that like, will this start to dramatically affect unemployment soon?
Yeah. Have you guys seen Chevron or heard what Chevron's doing?
No.
They are laying off half of their workforce.
That's insane.
Half. I got those numbers today from someone, and I was like, "You got to be kidding!" They're like, nope, that's what's coming down the pike. And
who's going to be pumping the oil?
Machines.
Robots can't do that one yet.
Why not? Why not? It's like put it in the finger. It is the pump.
Yeah, I've seen pictures of Chinese factories, and it's just crazy what they're doing. I don't see how we'll have anybody, if it comes over here or when it comes over here, anybody doing FedEx sort. I mean,
that's already been automated. Last Christmas, not this past year, the prior year, they replaced a third of their seasonal workers. No more seasonal workers. All machines.
Yep. I mean, it's just amazing what it does, and they don't have to go pee, they don't have to have health benefits, they don't have to go whine to the manager.
I got an idea.
Yeah, I know. And that's why when he
Darin,
said,
stop talking.
No, what's funny though is you brought up older workers. Who was it? Which company it was that was getting rid of their older
Microsoft.
workers? I was like, oh boy, great.
When I get
It's not half. It's not half of their. It's not half of their workforce. It's half of specific sections of their workforce.
Right.
It's
But-
like finance, IT, and HR. They're going to cut heads.
I mean, that's a
by
big
half.
part.
But there's a
Yeah.
PR
Hey,
thing
it
going on
means
here.
HR when you got robots,
Yeah,
Right.
man, HR robot would be tough. Jeez.
Like, no soup for you.
You cannot take lunch. But yeah, I think they're running into a PR problem now, and if they eliminate too many jobs, then there might be afraid. And I say these are the 7 leaders of the world, or whoever it might be, that so many robots are going to take so many jobs, and they have to kind of soften that blow, because we're losing jobs in the white collar, blue collar areas now, and losing the middle class as well. So it's interesting what they're doing, because we'll have to see. You're going to see these, I guess, all the big ones. How far are we through the big ones, the big 7?
I think all of the Mag 7 reported this week.
We still got NVIDIA later, though, I think. So, yeah, it's interesting. They can't. They could be. I don't know that I agree with the percentages these guys are putting out there as well. But anyway, I've got my hat.
Wants to work. I mean, if you had the opportunity and a chance to not have to work,
But
go
still got to
ahead.
get paid. Sure.
You
I mean,
still
that's
have
the
to get
problem.
paid. That's
the problem.
The actual issue. The getting
That's
paid.
that's the Elon Musk universal income thing that he keeps talking about. But then how do you decide who gets what? To me, that's even more control of government over people if you go to that. So I don't know. It's going to be fun.
Financial freedom mortgage. I don't know what you're talking about.
That's right.
Wouldn't you get
Freedom
bored
from the
with no
bots?
work?
No, you create your
Would I get
creative
bored
side would
if I wasn't working.
At least me.
Yeah. Well, I guess you have kids, so.
Oh yeah, no time to get bored here.
Yeah.
Baseball practice, play practice, ballet practice, all that.
Oh, you're gonna start
Piano
practicing ballet?
The 5-year-old.
When we get UBI, Royce is gonna do ballet.
No.
Unless your true passion.
All right. So the point here, is margins. And if they're spending so much on this build out on all of these data centers, like you said, they have to eliminate people. so that their margins don't get even worse than they're already going to. I kept hearing numbers that they won't repay all of what they're spending on this until like a decade or so. So I don't know.
No,
It'll be
that's how long. Yeah, that's typically how long a data center takes to stand up, become profitable, and basically eventually
and then pay
begin
back
its
what
next
you've
cycle.
already, yeah, and pay back what you've already borrowed from our future grandkids. It'll be
That's not how funding of large projects work, but okay.
but I'm talking about the infrastructure bill that was put out there that the companies get the money from to build out, especially the top 7, that is being borrowed from our future because we're already 40 trillion in debt. So the Congress will continue to kick it out, though, I guarantee you, as long as they're getting paid. Let's go to it's a natural thing to go to next, which is the earnings. And we already said this is what was going to happen, is that the earnings will come out all just great because of inflation. And that's the way it works. I mean, if everything costs more, if everything costs more, then you're going to make more money and more margins. And that's why at the top end of the K economy, those guys are just throwing parties every week. But go ahead. What do you have there, Daniel?
So about a third of companies have reported earnings so far, with 73% of them beating earnings and 79% beating revenue, which outpaced last quarter. And as we said, the Mag 7, I think all of them but NVIDIA reported now. So Darin, guess how much Google surprised on earnings by? One of the biggest companies in the world.
20%.
90%. They beat by 90%.
That's great.
Right.
You can do that.
So they're up 10%. And keep in mind, they're up 10%, and they're a $4.685 trillion company.
Excellent.
Yep. And you set those low bars, and you will do that every time.
Well,
just like see Royce's face.
If you don't set low bars, then
I would love Darin to be a Wall Street analyst. He just sets the bar crazy high.
I don't think he could
And then
do
he
it.
realizes
I don't
he'd
think
get fired.
he'd have too much of an opinion. I don't think.
I just want to be an accountant. I want to go. I want to match what comes out with the actual real numbers. That's what I want to be, is accountant, I guess, and go in and not a friendly accountant that they take to the strip club and to the other places every weekend. I want to be a someone who's not in the loop accountant. No, I don't.
Wait,
I don't.
so I have a question. Well, actually, first, if Josh has anything to add, if not, I have a question for Royce.
On earnings, anything on earnings, Josh?
Well, yeah, I mean, I was just kind of blending the two topics together. Like, you got to think about the fact that if Google beat by like 90%, and from everything that we've seen, they blew the numbers out of the water. Like, I mean, they hit on everything, but you look at it, and they're only getting like a 10% bump. Yeah, I mean, a 10% bump on a company that size is substantial. I mean, it's nothing to bat your eyes at. But if this happened to anything else, you're talking about a slightly meteoric rise if they're, doubling expenditures. But it kind of goes back to what we were talking earlier, is the biggest problem. And if you look at like what happened to the other Mag 7s, like, Microsoft, NVIDIA, et cetera, they released earnings, but then, or Tesla, they released earnings, but then hey, by the way, surprise, like our capital expenditures are going to go up by 30 to 40% next year. Like, yeah, these are the numbers that we thought we were going to have to spend. These are the numbers that we're actually going to have to spend. And it's because, a couple of reasons, like people are realizing that they might have to spend more now, but to get ahead of what is coming, they're investing kind of in AI now, but AI is not actually lucrative. Like it can make certain things. It's obviously, it has improved efficiency in a lot of ways, but the problem is that a lot of companies are starting to crunch the numbers. They're getting like more real world data and realizing that it is actually more expensive to replace. Like if you do a 1-to-1 replacement, it is more expensive to have an AI agent than it is to have an actual human do the work with, some sort of like AI assist. So that's what's happening with all of these CapEx issues. They're realizing that, hey, we're going to have to spend a crap ton more. It might actually work out, 5 to 10 years down the road when we've gotten leaner and meaner. But for right now, we're going to have to front load all of the costs. And it's kind of what you're seeing with the market reaction about, like Microsoft, Tesla, NVIDIA, like they all had, they beat on earnings, beat on everything. But at the same time, the market reaction was like a 5 to 7% drop, depending on which ticker you're talking about. And so it is kind of creating this, everybody's blaming AI for all these tech layoffs, when in reality, a lot of the issues are coming from the fact that they're realizing how much they're going to have to front load all of these expenses, and it's affecting the stock prices now. It might end up working out in the future, but that's 5 years down the road. We'll see what actually happens.
Go ahead, Royce.
All right. And I guess to that point, it's a little bit of that, a little bit like the .com and versus cloud, right? In 2000, .com is cloud. They're the same thing. It just was rebranded. And in 2000, basically, we didn't have the infrastructure to support everything. Took a good 8 to 10 more years to get the infrastructure there to basically make it work. So I think we're going to see a little bit of the same shakeout on whatever they're going to rebrand AI in the next 5 or so years, maybe synthetic intelligence or something, something silly. But they'll rebrand it and then put it back out there, and then it'll be successful. It'll be a nice hybrid between normal workforce and an AI workforce.
Just on that specific part, because given I was too young, so correct me if my history reading is incorrect, but during that time period, with all of that infrastructure build out to, support the internet and kind of like build the cloud, didn't like all the fiber companies go bankrupt because too much was built out? And like, couldn't you say that like that could happen to these data center companies? Like, I'm not saying
No.
that's my opinion, but,
it's actually the exact opposite. What happened was basically everyone said everyone can get famous by just going online and putting everything in the cloud. My stuff, I have a website, it's owned by this ISP, and so everyone decided to become an internet service provider. Everybody. So they wasn't necessarily fiber companies, it was internet service providers that were popping up everywhere saying, hey, we're all going to be rich. And then it was too expensive, and then there wasn't enough bandwidth, and then there was a ton of lag, because basically the backbone that was driving the networking and all of the apps wasn't big enough or wide enough or fast enough to basically handle all the traffic that they were trying to throw at it. And then so slowly, one by one, they're like, oh, we're going to bring this back in house. We're not going to try to serve everything out of the cloud or out of a data center or out of a XYZ, because the infrastructure just wasn't there to support it. I think the major difference here, though, however, on the AI play, people are using it slightly different. It's I'm not even sure. Have you seen the new Google's front page? They have an AI mode now, right?
Yeah, I've accidentally used that a few times.
Yeah, so they're slowly trying to make it the new norm, right? And so as they roll it out and as it does become accepted, and it's like, hey, remember I would say we Google it, we'll be able to say we Google it again, because now there's an AI version, and maybe they're stealing market share from chat or whoever, right? Because they're like, hey, we were here first. People searched and used us first. They'll come back and they'll use ours, and we'll get more data points and then sell that data.
Yeah, the new term is Gemini, by the way, on that. I Gemini'd it, I guess, is what we'll be saying. Go ahead, Josh.
No one's going to say that. Remember when it used to be Bard or something?
Maybe you.
I was just say, like, to Daniel's point, like going back to 2000, like as another parallel between now and what we experienced back then, there were a lot of pop-up companies that had overpromise and underdeliver. It was like that whole model of growth at all costs. Like we will we're going to do whatever we can, and then so you get a lot of capital and equity that's injected into these, and that's what kind of fueled the bubble. Is like, where do you find out which one of these are actually, which one of these have substance and which one of these are just, flash. Mm-hmm. And so it's kind of how I assume a lot of the reason that people are looking at this particular bubble, bubble differently with the AI, because we learned our lesson last time. And I don't necessarily think that's true. I think a lot of people are ignoring a lot of things that happened, being like, oh, well, this time is very different. But it is kind of the same thing that happened. But there are other parallels to that, because you are going to see a lot of these companies that are investing as heavily as they can into AI. They have a great idea, maybe not the infrastructure or the leadership or the actual core to execute the idea that they're wanting to deliver. And so in this age of like mergers and acquisitions that we're experiencing right now, you are going to see a lot of those that are going to struggle, and then they're going to get bought up. And then we're going to end up with, a lot more of these. I don't want to throw out the word monopoly, but you're going to see a lot of these ones that companies are going to suffer, struggle, and then get bought out, which is very similar to what would have happened in a lot of these other, super cycles.
It's already happening.
Yeah,
it is already happening for sure. Zuckerberg, that was one of the problems with Meta's release, was when he started talking about future costs, and he's adjusted those. So his forward guidance on CAPEX went up, and it went up considerably, and it was because of things costing more now. Whatever they had planned for to spend, now they have to inflate that number because of inflation. So that was his thing on his specific ER, and everybody else is going to have to do the same. Now there's a term when we're talking about AI agents, and it's tokens or something, that is what was so expensive that I heard. Please tell me what that is, Royce.
I've heard you say.
But I'm just saying that was actually came out in a story about, that's why people are saying, wait a minute, we need to pull back because it's costing too much for the tokens for these AI agents. So what does that mean, Royce?
All right. So they're gaming the system. It's just like you're playing a video game, right? So every time you use so many of these tokens, they give you an allotment. Let's say, instead of saying, hey, you can ask as many questions as you want and you pay a monthly subscription, they're going, how about we give you 20,000 tokens, and every time you use anything, it costs you about 200 to 300 of them.
Right.
And so consequently, you get about 40, 50 questions in, and you're out of tokens, and now you have to fill a basket back up.
So it's like going to the fair and going to the ticket thing and say, I'll take 100. This will buy me a bunch of rides, and then it ends up buying you 10 rides, and you're done.
And you're done. Or you have reaching back in your pocket to basically handle some more money.
Because
so
your child's crying. Yes, please.
Yeah. At the end of the day, they're like, hey, you want it. You have the technology here. You just got to pay for it.
Yep. So is that how we're monetizing it now? Is that's
how some are? That's some models are using that to I think Lovable does that for their website design. I've seen it on a couple of other. I think NVIDIA.ai also uses it. Yeah, token-based AI usage to basically unlimited revenue, because every time you need more, you'll pay, and they know you'll pay. It's a pay to play, right?
I mean, and it is them gaming the system, but at the same time, a lot of these costs have gone up because, I mean, the bottlenecks that a lot of these data centers are running into, we do have a disparity between the skilled workers. Like we don't have a lot of the blue collar guys to do a lot of this work, like the HVAC, plumbing, the people that are actually like physically building out these data centers to get that kind of skilled labor. So it's the people that are actually doing that job can charge whatever the hell they want, and people will pay it because they have to get in right now. And so what used to cost, a $5 million data center probably costs, 3 times as much right now.
Yes,
I have no idea what the actual numbers are, but I do know that, the constraints that are being presented, and a lot of, it is going to be one of those things that impacts. So that's why it kind of goes back to what we talked about originally, where they're realizing that their CapEx is going to have to go up because their OpEx is going through the roof.
Well, it's America, right? I mean, it's supply and demand, and we have a shortage of chips, and that's why these companies are trying to do their own chips now. And that was another thing that was mentioned in one of the ERs. It could have been Meta's, is that there's not enough chips out there, and so when there's not enough chips, it's going to cost more. And so that's what they're dealing with because of supply and demand as well. But even who was
misdirection to make more money.
Oh, of course, it's always misdirection. But taking things in house, I do see these big seven are doing that. They're trying to do their own chips, their own things within house, so that they can keep the cost down, because they're going to have to, because they're already going to spend so much money on this transformation into this new world, and we're not even hitting quantum yet. We're here still on get the CDC or the CDC. Listen to me. We don't need any more of that. Get the data centers, the DCs. Get the data centers built, and then we'll roll in the quantum after that. So I mean, they've got a path to just constant money for the next 30 years.
Yeah, I don't know, though. I think the chip shortage thing is kind of overblown. I don't think it's really a chip shortage anymore. I think it's an actual implementation of the chips. Like, it's everything else surrounding the chips that has really become the bottleneck. Because, I mean, that, like, to your point, you've got everybody and their grandmother that's producing their own chips at this point.
Mm-hmm.
Yep. Well, man, we hit that subject hard, but that is what we're in right now. I mean, we are really because of these ERs, and it that's the big thing right now, is how much it's costing everybody to build out. It's not getting any cheaper with the Strait continuing to be closed, and we still haven't seen it in our PCE number quite yet. So will it be the next one? I mean, that's kind of what we keep waiting for, is when is that report that's going to actually show how much people are paying more going to hit. So we'll see if it's next month. That's what that would be. Well, we'll say June, right? We've been talking about June. Mid-June.
not Daniel's May.
That's right. He's in May already. Yes. Let's stop the clock over here. We'll stay in April. All right. So of course, Wall Street's saying buy the dip. It doesn't matter that our heads are bashed at the top of it because we're hitting the ceiling. They want you to buy more so that they can pull the rug. So introduce this, Daniel. Buy, Kramer. Buy.
So a lot of the big banks in Wall Street kind of, came out with some statements this week that were, mostly pretty bullish and really kind of lacked caution for anything coming up. So, JP Morgan.
Reality.
JP Morgan said any geopolitical risk kind of won't play out, that inflation is cooling, and cuts are likely to come. And because we've had great earnings, which, if oil prices keep climbing, we know part of that's wrong. Goldman Sachs does cite near-term technical pressure with hedge funds degrossing, pension funds selling $25 billion in equities, and systematic funds not having much more exposure to add. So they're not saying that things are going to crash, but in a short-term perspective, things are maybe a little bit extended and don't have much fuel left to add to the rally. And then Evercore noted that a 13% surge in 12 sessions is historically fast, as you can imagine. Mm-hmm. And that we do have some risk factors with oil going back to 100, which could, the longer that continues to go up, could add pressure to the top of the market. So the question becomes, what shoe will drop that will either turn the tide, or will no shoe drop and we keep ripping higher, which I think is Darin's opinion, is that we're so back.
You're so far back I can't even see you anymore. Yeah, it's crazy. It is crazy. But there's got to be something to cool it off. It's just a matter of
Why?
control.
Why?
Because you got to pull
'Cause
back. You
Darin
went up too
hates
quick.
fun.
This is something you've even said, Royce, that you go up that quick, you've got to pull back.
Or maintain that same speed and probability will expand. So like that whole buy the dip thing could actually work. If enough people continue to buy, you have enough buy volume and enough, basically the bands will expand.
It worked
Nothing
the last 2 times.
forces a downtrend. The only thing that forces a downtrend is too many people do it all at the same time. So if you don't get enough people doing it at the same time, up and to the right is all day.
Well, and that's, I mean,
An object in motion will remain in motion.
No, yes, to Royce's point, that's why you keep
yeah.
hearing so many of the talking heads saying the same thing about how inflation doesn't exist. Like we're up and to the right, we're at all-time highs. Like the market is great. I have no idea what you're talking about with this. You know, nobody's struggling. America is doing fantastically well. And if enough people keep saying it, everybody else is like, well, damn, are they right? Like, what am I missing?
Mm-hmm.
And then you, at some point, so many people start to say it, you start to actually believe it. And even though your eyes are telling you one thing, everybody else is telling you something different. You're like, okay, well, maybe I'm the dummy in this scenario. And I'm not the one I'm not grasping, whatever highbrow thing that they're actually telling me. And so you just start to believe. And as long as everyone continues to believe that the market is all well and good, then people are just going to be like, they're going to keep carrying on. And that's why I believe a lot of the reason that the economy, at least on paper, is continuing to be somewhat resilient is because people are just like, oh, well, this is a temporary blip. Oil prices are not going to affect the crazy amount of inflation that's about to happen, over the next 6 to 12 months. Like this, it'll be, sure, we're 8 weeks past the 2-week mark on this war, we're still, everything's going to be great and gas prices are going to go back down and everything's going to be hunky dory. But, if you just keep peeling back the layers of the onion, you'll kind of start to realize that you're just, the always fun term is being gaslighted. And that to me feels like a lot of what we're seeing right now.
Pun intended.
Yes, you got it.
Nice.
Are we being dark lighted? I don't know.
The other thing that basically
gas darked. Go ahead.
Yeah, sorry. The other thing that basically levers that basically I pay attention to is they keep pulling very large levers and doing it very subtly. So, like for example, in 2024, I think November of 2024, they pulled a lever that says, hey, banks no longer have to have a reserve. So that literally that 10% reserve that all banks had to carry got released into the market. So now we go higher. Yep. Right? So if we are actually adopting cryptocurrency and doing all this stuff where things are changing and the monetary system is changing, and you no longer need a Nostros and Vostros account, those basically different currencies other countries hold, basically so they don't have to do the exchange rate. If all that money then gets released as well, once again, that's another lever that can be released to let the markets actually go higher. Because that $25 trillion that's literally sitting in the bank actually can be deployed into the markets. So it's just a matter of controlling the flow in and basically knowing like, hey, we will crash if we don't do this. Okay, so let's do this to make sure we don't crash.
Is that a Band-Aid or is that a fix?
Oh, it's a whole bunch of Band-Aids.
It's a yes. It's a you can't even see the person anymore. There's so many.
It is.
I know you guys hate this term, but extend and pretend. But I know you hate that term. It is an
entire freaking roll of duct tape.
Hey, duct tape works though. Band-Aids.
If you can't duck it, oh well.
You gotta say, never mind. All right, so I guess everybody's
drinking.
I am not going to be Jim Cramer and say buy the dip. I mean, it has worked the last 2 times though. When we thought we were done, bought the dip, and people made, and it was retail that actually succeeded. Evidently, a couple of these times when the dip was being encouraged to be bought. I don't know. Is it going to be? Are you asking what's going to the black swan again question, Daniel? Are you asking that? Is it going to be the extend and pretends that the PIK loans that start the downfall to the banks again? And I mean, it's I don't know.
It's not a black swan if you know.
Right?
Yeah, but,
That's not how that works.
yeah, but we're not in that group.
All I know is I see these charts in my favorite place, Fred, again, that are just really looking crazy. I said that 6 months ago, but now they're extending more and more to just crazy things. So, but you're right, Royce. I mean, maybe we've already started doing that conversion. All the banks are putting that money out there, and
Someone said it started mid-February.
Yeah, so they don't care about the reserve anymore, and which sounds even scarier. And maybe they've already started underneath the crypto as well. So I mean, that's interesting. At some point, maybe they know when the world's going to end, so they know we've only got X amount of years left. So we'll just extend until the end.
Give me your tinfoil hat. Come on.
So instead of extend and pretend, it'll be now extend to the end. You guys can use that, by the way, if you want.
Wow.
Yeah. Bring us some revelations in here. All right. That's all I got on that. Anybody else before we move on to the crayons? I believe we've got a Tesla waiting outside, a self-driving one maybe. Let's see. We've got let's do the after the bell crayons and charts with Royce Wells. And he has he's got Robinhood pulled up because he wants to talk again about stupid Vlad. This is just to get at my craw here is what this is.
This is just to get in your craw. So we had that top over there in September, and it's been falling ever since. Well, it's finally made it to its pink line, and the question is, will it be able to make it over? For Robinhood to continue or basically turn into a long-term buy trend again, it has to get over our parabolic SAR, which is saying if it can get above $96, then we win. The only problem is a lot of the charts don't want it to get above that $95 mark. So every time it gets near it, it gets repelled. So now it's going to become a tug of war between staying below or trying to get above that $95 valuation or falling below that $69 valuation. So right now, kind of stuck in the middle, and don't you do it. Don't you do it.
Stuck in the middle with you. Go ahead. I did it.
You did it.
Don't throw it at the net like that, Royce.
All right. Well, hey, that's okay. I will use Robinhood as my pick for the next 8 weeks, just for you. No,
right?
No, but yeah, between 95 and 69, that's where we're sitting, and hopefully, which is right in the range that we said. It's trying to stay above that $69 valuation, and we have lots of resistance that's right at like the $60-ish range, 67, 62, 66. So we know exactly where it's stuck, and if you just play the ranges, you should be able to win. But make sure you do seek a financial advisor when seeking financial advice.
Nice recap. This it also shows how the algorithms work here, but the it did drop into my channel this week. Robin the Hood did, and then it popped up, and then it popped back up into Josh's. So and that was on Wednesday. So yeah, that flows really good. Unless you have another chart you want to go over into the the weekly bets. You gonna do another chart, or is this it?
Nope, that's it. That's all.
Okay, cool. I mean, whatever Daniel picks here, but I just gave that away.
Gosh.
So that was crayons. I do keep saying Daniel. I'm sorry because I had to for so many weeks.
This season.
So many weeks. I have not. That was crayons and charts with Royce Wells. I'm doing the graphics while you guys are doing that in the meanwhile. All right, so let's get back to us here. And we do have a new scoreboard. We've had a new contest, if you will. Is this week 5, 4, 5?
Yes, this is
What are we
5.
on?
This is why.
Yeah, 5. So we've had 5 that it's a little different how it works. I'll go ahead and bring up that scorecard, which we have up here. We had first week was Planet Fitness. Then we had Palantir. I forget even what CIFR stands for.
Cipher.
We'll just use the the tickers, ABAT and then Hood, and I guess it'd be nice if we had whose numbers whose, but I think this must be Daniel then with the yellow.
Yeah.
We have is it Royce with the blue, the darker blue?
Yeah, there's a key at the
Or
bottom
the-
of
There's a key at the bottom.
Yeah, but it's not showing on my on the OBS. That's what I was saying. It'd be nice if I could pull it up into that. And as you can see, Josh won Hood, so he is the fuchsia. We'll go with fuchsia maybe. And then I finally get on the board in teal
you colorblind
for
fool.
batteries. That's right, for batteries. They fell down to my channel. All right, but as you can see, what matters is where we are now. So it is 2 to 1 to 1 to 1 now. So that makes things a lot tighter than when Daniel was sitting on his throne, his just enjoying all the grapes and the fans and everything else. Situation has changed. So congrats, Josh, on winning this week. But once it drops next week, it'll be back in my channel again. Well, by the way, Hood, we know is as far as the ER goes, I mean, their forte is crypto. So as soon as we convert over to this new crypto thing, it'll probably go crazy. So,
Oh yeah.
All right.
It's gonna be fun.
So that's our wager. That's how it works now.
So
We
Josh
still have to decide, though, Josh,
Yeah, do I
what
get a
the
pick?
new.
What's happening?
You actually get to pick. You actually get to pick.
Okay. Since you're talking about like manpower versus AI, let's go with the Manpower Group, MAN.
Man,
I think I saw them in Vegas once.
What do they
never
do?
mind.
Yeah.
He said, "Nah, it's a blue man group anyway." All right.
Had not been forgotten, not Jewel.
Workforce solutions and services. What does that even mean?
Yeah.
All right, we'll move over to the charting.
Do they
again while
literally
he's
provide
looking
men
at
to
this.
do work?
And I'm gonna switch this.
I think that's sexist.
Okay.
No comment. Wrong podcast for that.
All right. What's the name of that?
That's
acronym? How's
that's
that?
leaking
All right.
downward
All right.
because every company can have their own manpower hiring now. All right, go ahead.
There you go. So, all right. So we got, looks like a range between about 27 to 34. 27 to 34.
It's $7.
And so $7 divided by 4 equals $1.75 a piece. Do you want to give everybody $2 and call it good?
That seems like such a narrow channel. Just trying.
Hey, you can make it bigger as you want.
I do want to make it.
Where probability
Bigger
is
up or bigger down?
Yeah, probability with it over the next 2 months.
Mm-hmm. But that is the probability over the last 2 months. That's how I got that range.
27 to 35
Let me turn on my 3D guy to see.
or 26 to 34.
That's the number.
The most probable in the next 2 months, most probable looks like between 37 and 18. That's a huge range. It's basically a $20 range, $5 range. So is that what you want? $5 for each person and then say, let's go?
He's thinking out his strategy in his head.
Well, no, the number I had, I was thinking 25 to 35 is what I had in my head.
Okay.
It's $2.50 a piece.
But no, I mean, like one person gets 25 and below, and the other one gets 35 and up.
Right.
If we're going to do these crazy
Oh,
ranges.
okay.
Then you get 5 in between.
Yeah.
So I will take 25 and under.
Okay. And then who are you picking next, sir?
I'm going to make Daniel go last for sure.
Dang.
That's just
Wow.
rude.
She just
When did this get so personal?
because
The
he's not
king must
winning
go
this
down. The
season
king
so
must go
far.
down.
You must not have been paying attention.
He's competitive.
Uh-huh. So, all right.
So Royce, are we doing these 250 channels then?
No, he said $5.
$5.
Keep up.
Okay, so then it's really a $20 channel.
25 and no, it's 25 and under.
25
And
to 30, 30 to 35, and then 35 and above.
Correct.
$5.
Correct.
Okay.
All right, Darin, do your thing.
I mean, I was going to go below as well, so I'll just go the next one. The next one up.
30,
25 to 30.
25 to 30.
25 to 30. Or 30 to 25. I know you do it that way.
No, that's fine. So that means I'm going to pick the next one. I'm going to do 30 to 35.
All right.
So Daniel gets 35 and up.
Correct.
Okay.
Hell yeah.
Up and to the right, baby. Up and to the right.
I mean, that's on brand. That is on brand, though.
Yeah.
I wanted the top one anyway, actually. So.
Yeah, that's where I'm at. I'm like, you guys keep going perma-bear, and I'm like,
Look at that thing on the intermediate band. It just hit a buy.
Well, look at the business, though. This is personnel services. I mean,
I'm looking here
Aaron,
on the Apocalypse
you
Daily.
can't just like pick and choose your bottoming patterns, man. Come on.
No, this
this would look like one. This is starting to look like one. So, I mean,
word continuation written all over it.
There you go. There you go. Let me turn on.
All right. He's going to add some more stuff here now that we've all picked.
Oh, wait.
Now,
yeah.
This is when he likes to prove us wrong.
Okay.
When he does
Yeah,
this.
yeah, Daniel. I think Daniel's going to win this, guys. Sorry. I think Daniel's going to win this one.
Aha.
Hate it for us.
I do.
No, I didn't say I'm going to win. I said Daniel's
I
going
think
to win.
Josh will probably murk himself.
Merc.
Well, I only care so much.
He's gonna go Control Alt Delete. You know.
Yeah.
I like my channel. It's going to be between 26 and 30. I like it.
Mm-hmm.
All right.
You said 25 and 30, right?
Yeah, but I'm saying I think it's not going to go below 26. So
It's
We'll see.
25.01 to 30.
25.01.
well, there's a whole thing we're not going to go over on that too.
No.
Royce.
Mhm.
When you share a border, you've experienced that already once.
Yep. But, all right, guys. Well, I need to jump off. I got
Yep,
another
let's get
meeting
out of
at
here.
5:30.
Everybody say bye.
Peace.
See you next
Peace.
week.
See you next week.
Row your boat. Oh, okay. All right.
No. No.